Hello, and welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to escape feeling trapped by the 1031 exchange, exit highly appreciated primary homes, businesses, real estate, so you can create and preserve more wealth or help your clients and friends and family do the same. Hey, I'm Brett Swarts, and I'm the host of Capital Gains Tax Solutions podcast, as well as the founder of Capital Gains Tax Solutions, and I'm typically joined by some of the best real estate, financial, wealth, and business minds in the world, where they share their ideas, deal stories, and inspiration, so together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. He is a brand new client of mine, and also now a friend. He's out of the great state of Texas, and he is the head, one of the acquisition and deal underwriting for Epitome Development. And they have a vision for helping people create and preserve more wealth through land acquisitions in places that are growing in Texas. Texas is such an amazing opportunity for a number of reasons we're going to be diving into. But we're going to be talking today with our guest about his sale and his exit of highly appreciated land and using the Deferred Sales Trust for the first time. Please welcome to the show with me, Dharma Raja. Dharma, how are you doing?
Doing good, Brett. Thanks for having me.
Absolutely. And for our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Sure. Yeah. We're heavily focused on land development, especially in Austin and Houston, and now into San Antonio as well. And we acquire and develop land for single family and mixed use subdivisions, both single family homes and also multifamily slash some commercial and retail. So
Excellent.
that's
Excellent.
kind of what we do, and we have a portfolio of holdings across Texas.
Excellent. And by the way, you can learn more about Dharma and his team by going to epitome.dev, and that's EPITOME.dev. Before we dive into that kind of the deal story and also the Deferred Sales Trust part of it, I want to take one other step back. I want to take one other step back, Dharma. And I believe we've all been given certain gifts in this life, and these gifts have been given to us to be a blessing and help to others. And so I want you to go back maybe to your the high school days or the earlier days. Kind of like, who was Dharma growing up, but in particular, what are maybe one or two strengths that you believe you were given, and how does that help how you help and bless people today?
Yeah, no, sure. So I think. I think I kind of grew up in this business, and that's what my parents did. And really, I think the big gift was really being a part of. I think when somebody's really involving you as parents in decision making, and you're a part of a lot of what goes on in the house, you get to learn things naturally, especially at an impressionable age. So I think that's a big gift that you could have as parents, really, sharing with kids their journey of how they're going through, whether it's doing well or the struggles. It kind of prepares you better for when you have to go out on your own, right? It's versus just kind of too much of sheltering doesn't necessarily always help.
Good.
So I think that's been a big overall blessing.
So really good parents that help you grow up in the business and help you to learn the business through the fire or being a part of it. Is that a fair summary?
Good or bad, yeah.
Yeah, absolutely. That's great. So let's dive into to the Deferred Sales Trust, and we won't talk specifics, but it was in Texas and it was some land, but we'll just kind of talk in kind of generalities here, right? But you were looking at a huge tax, and you were saying, you know what, Brett, maybe this is a good fit, but take us to the moment when you were looking at this, kind of what was the problem, and what helped you to kind of get comfortable with the Deferred Sales Trust.
Sure. I think I think in general the options in our business when you exit on a capital gains basis is you typically do a 1031, or you do or you look at nobody really, the Deferred Sales Trust is not something that's obvious that jumps out at people. And, because I've been watching your podcast for the last year and a half, I kind of learned more about it. That got me a lot more comfortable on what the powers of it. I think the big thing for me was that the flexibility that you could actually deploy it in different asset classes, um, and also not have the time pressure um, that comes with the 1031 was what got me really comfortable with this. And it's the 1031 is only eligible for certain types of capital gains, whereas the deferred sales trust is a little bit more flexible, right? So I think it's primarily the flexibility of what it affords. Of course, doing it for the first time is always a bit of a learning curve, and it's not easy, but once you get over it, things gets much smoother. So you've seen me come along that journey, so you know what I'm talking about.
Absolutely, Dom.
You probably see it all your clients do the same. So.
Yeah, it is very common, but it does feel it is a lot, right, to learn for the first time, and even with yourself and all the development and all the history of your guys' company. I mean, you guys have done. I'm looking at some of the stats here, which is pretty incredible. You have over 250 million under development, 800 plus acres under development. You work with over 300 accredited investors, and then you're also building 300 plus build to rent homes. So you guys are very active in what you do, and you're experts in what you do. But what was the biggest thing that you had to? When did it really click? Take us to the moment where it really clicked, right? Where like, oh, this makes sense, right? Or what was the biggest surprise? What was the biggest thing that you had to overcome as far as knowing that it's legal, it works? Kind of take us through that process.
Yeah, I think. I mean, anything that's something like this. That's this flexible. That is available for you to use as needed, on demand as needed, when you find the right opportunity, obviously, right? Versus having to be under pressure to deploy it into an opportunity within a time frame, which forces bad decisions, right? Any money manager, any capital allocator who's under pressure to deploy a certain amount of money within a certain time frame, more often than not ends up making poor decisions, right? Because you're just under pressure. So I think the big thing is being able to kind of hang on to be able to make that decision. Also choose what type of investments you really want to get into. Is a big thing, right? Having that flexibility of varied decision making across asset classes is a huge. These were the two main things in terms of getting across any sort of concerns and pain points. I think you gave me the chance to speak to a lot of your current clients. I think that helped a lot, and I think it's just the communication along the process that really got me comfortable, right? Mm-hmm. And it continues till now, and it's I'm very happy with the decision we made.
Excellent. And you talked about the flexibility, and that's part of why I started the company too, for the entrepreneur real estate professional and investor and client. I mean, I grew up in the business, and I was at Marcus and Millichap, and I saw the 2008 crash where people were pressured prior to that in the 1031 exchange to make decisions that necessarily they wouldn't have made it had not been for this huge tax, just to see a lot of that wealth get broken apart. They had to crawl out of it the next 3 years. Some lost everything. I had some clients lose everything, lost half. And the 1031 is not always our friend, right? Because of the lack of flexibility. And the biggest thing is the shotgun 45-day engagement, 180-day wedding. And that creates a situation where it's challenging, right? But even when you want to develop more properties and do more deals, you also want that entrepreneurial freedom. So talk about the benefit and the flexibility of being able to go back into your own deals, because at the end of the day, that's how you've made your wealth. That's what you're most comfortable with. So kind of speak to that flexibility.
Yeah, I mean, I think the ability to own deals or the operators. The main thing is that is getting comfortable with the quality of the deal, the return profile, and the risk reward, right? A lot of the stuff that we do does involve risk, but is the reward commensurate? And if it's a little bit safer, is the return still acceptable, right? So that's the kind of analysis that we do, and having that control to be able to make the decisions you want, whether it's low risk, low reward, or high risk, high reward, right? Having that ability to make that decision, whether it's our investment or somebody else's, is a big thing, I think.
Yeah, and the deferred sales trust also in particular being able to go back into those deals with you, right? So it's not as if you have that extra capital that would have been paid in tax is able to deploy, and also into some smaller deals along the way. You don't have any of the equal or greater value situations, especially for you because you're buying land, right? And you're typically buying land perhaps at a good price, and then you're kind of developing it slowly or even quickly sometimes. And then you're going to probably go buy more land because that's what you're in the business of doing, but it doesn't necessarily mean equal or greater value. So just talk about like the frustrations you've had in the past with the 1031 exchanges, or just paying tax because it wasn't working for you.
Well, so I think, I don't want to talk too much about the 1031 because honestly, my experience is very limited. But I will say this, that to me, the biggest thing with this deferring your tax liability, and having the flexibility via this deferred sales trust to defer your tax liability was we're in, when the going's good, everybody has a window of when they're able to, double down and put the foot on the gas. And for us, so we're in that window. And so having that excess liquidity for us to be able to make those decisions really kind of compounds our overall return profile. And there'll be a day when we have to, when we're kind of, slowing down for a lot of reasons. And then at that point, I think would be having the flexibility to defer your taxes for a certain amount of time is great, because then you've really compounded it. You use the tax dollars to compound it to a great extent, and you feel good about paying the taxes too, right? So
yep.
I think that's an important part too. So I think for us, that was a crucial thing other than just the flexibility.
Absolutely. And for those that are wondering, if you want to get your deferred sales trust started today, you can go to capitalgainstaxsolutions.com. And, the government's no stranger to tax deferral. In fact, that's why they allow, 401ks and IRAs and 1031 exchanges. And the deferred sales trust is just a nuance of an installment sale for those that are wondering. It encourages, and part of the rules is it has to go back into a business venture or an investment, but it actually creates more jobs, creates more housing, helps to incentivize people to build and do these things with the money that's tax deferred, rather than just put it into the bank and not do anything with it, right? Or like for example, cryptocurrencies crashed here in the last couple of days. Stock market's taking a big hit. And then if someone doesn't incentivize to sell because of the tax, the money can't get redeployed and diversified into the economy, which creates more jobs. And so that's one of the biggest misconceptions. Sometimes, Dharma, is people go, well, how's the IRS winning here? But once you break it down, it really does make a lot of sense. So let's talk about that right now with Texas. It's booming, right? And you're seeing a marketplace that is still pretty hot. But do you see any signs of it slowing down in Austin or any parts of Texas? Or what are your thoughts on that?
Well, I mean, let me say, first of all, I would like that it slows down some. I think it's just been, you always, in all business cycles, you go through an abnormal growth phase and then you go to the normal growth phase. So I think the sooner that happens, the better it is for everybody in the business and not in the business. All right. Having said that, I think there is going to be an impact of everything that we're seeing in the markets, for sure. It's just natural. But I think Texas and Austin and Central Texas in general, and specifically, would be a little bit more sort of insulated than the overall effects across the country, just because of so much of migration into the state and this part of the state.
Excellent. We're
following the job growth, right? So
good.
Well, no, I'm just saying it's following jobs, and so companies are investing heavily. There's a public-private partnership element to this, and there's a lot of money coming into the state for creating new jobs, both manufacturing and tech. Right? It's not just software. There's a lot of manufacturing that's new. That manufacturing has not come to this level in America in decades, right? And it's coming to Texas and to Austin. Samsung. There's a lot of companies that are.
Yeah, Oracle, Tesla, HP, all last year decided to move all their headquarters out of California to Austin, Texas. It's like incredible to think about what's happening there. And you're right, it's following jobs, and it's following where it's easier to do business, right? And it's a little bit lower taxes. This is part of where we're at. There's a saying we have around here. It goes, it's not at Capital Gains Tax. It's not just about tax flow. It's not just about cash flow. It's about tax flow. And so Dharma, as you have made wealth and as you've grown wealth for yourself and others, how has your mind shift changed since just being about cash flow to more about tax flow? What, is there a moment when you're like, you just paid so much tax, you're just like, gosh, I mean, even though you're in Texas, right? But was there a moment you're going, man, I've got to really get my tax flow game leveled up?
Yeah, I mean, I think it's uh I like the way you put the tax flow, right? That's an interesting concept. But I mean, for us, it's just for me, it's like how do you take advantage of your market cycle and do what you do best and what you know best. And this just jumped out at us as a option to be able to kind of help us grow the business versus you're always looking at cost of capital, you're always looking at what the market's willing to do, in terms of lending and, equity and your overall capital stack and all of those things. And, if you look at your tax dollars as a component of the capital stack, I think it's an interesting way to look at it, and definitely having, additional ability to do that is great.
Yeah, I mean, because a lot of multifamily syndicators, or just syndicators in general for real estate deals, land deals, whatever, right? They're raising capital, and a lot of times they're not realizing, or they are, maybe they are, they just don't have a solution for it until they meet us. Is that people are showing up after they paid the tax, right? 25 to 30 to 40 to 50%, depending on the depreciation recapture. Like cryptocurrency or business sales or primary home sales, you can't 1031, or even if you wanted to, until like a tick structure and for real estate deals. And so prior to them showing up, there's ways to defer the tax, and then once they're in the deferred sales trust, you can put it into those. And then when they roll back out, so it's just about, to us, tax flow is so much more important at this point, or becoming more and more important than just cash flow, because it represents such a huge amount of your exit, right? Of your overall capital stack, or of the next opportunity. And so to be able, I like the way you put it. You said, do what you know best and do what you do best. And with the deferred sales trust, it allows you to do what you do best and do what you know best. You don't have to give up that flexibility of being an entrepreneur, real estate land developer like yourself. You just have an extra amount, right? Now, Texas is one of the more favorable places, right? In that you have, no state capital gains tax, but you still have federal of 20. You still have Obamacare of 3.8. But above and beyond that, for your particular deal, it happened to be short in nature, and we were able to defer that tax, which would have been as ordinary income tax. So as a high income earner, it's even a better mathematical equation to be able to do that. So any thoughts on any of that, Dharma?
Yeah, I mean, I think like I said, the flexibility of the kind of transactions that qualify for a 1031 versus a capital gains. There's more sort of transactions that would qualify for a deferred sales trust, right? But still, more than that, even if it does qualify for a 1031, when you compare the two, I really strongly think that it makes a lot more sense to go down the route of what we've done here. So it's just a lot more flexible.
Absolutely. And so, by the way, I want to go a little bit on the play-by-play, right? Because I want to walk you guys through this. I get a call from Dharma, and it's like, I think we have like 3 weeks to go, Dharma. Like, this deal is closing in about 21 days. And Dharma calls me, and he's a busy guy, and he's doing lots of stuff. And he's like, Brett, I've seen you on YouTube, I've seen the podcast, I have these questions. Like, let's kind of get down to brass tacks, if you will, and let's go through this. And I'm like, okay, and let's get to know each other quickly here, because the deal is moving fast. So Dharma, talk to us about just the process it was working with us, and how quickly we moved. What was that like for the deal?
Yeah, no, you were definitely very quick in the uptake, and also give me the time to answer all the questions that we had to get us comfortable, right? It's not easy to try something new like this with hard-earned income, right? Capital gains or not, and so I think it was a big step to take on our side, and I think you guys were really good about getting me comfortable.
And then also being able to see the funds online, 24/7 access to see the funds online, get statements whenever you need stuff. How has that been post close?
Yeah, no, it's good. It's good. You have complete transparency, and I think it's a good process to that where we're part of any sort of decision, right? So I think that's important. That's the comfort that you want is, if you're going down this path, it's like, what am I giving up, right, in terms of freedom? So
Right.
that was a little bit of hard burn in terms of the questions earlier, but given how you guys have responded and given me the responses and answers and the process now as I see it, I'm very comfortable.
Excellent. Yeah. And so if anyone wants to learn more or get started with your deferred sales trust, you can go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. We also have our free mastermind every Friday, 10 a.m. Pacific Standard Time, 1 p.m. Eastern. We just go through deal close stories of the week. We go through frequently asked questions. You can join us there. That being said, Dharma, we are running out of time. Are you ready for the lightning round?
Lightning round. Okay. All right. I don't know, but let's try.
All right. Knowing what you know now, Dharma, if you could go back to your 25-year-old self, what's the one golden nugget you'd make sure to tell yourself to do?
When you see something, go double down.
I like that. When you see something, go double down. If what was that when you were 25 and maybe you did it, but was there something where you're like, oh, I saw it, I knew it, but I didn't double down? Was there something that sticks out of your mind?
Yeah, it was real estate for me when I was 25. And I had opportunities, and I was in a different capacity then. I was more of a realtor, but there were a lot of opportunities that I missed that I could have taken advantage of potentially, but no regrets.
Absolutely. You're here for a reason, right? Where you're at. So that's good. Question number 2, what's the number one book, or it could be a podcast or something that you really recommend in the last year or so to others?
Podcast and book. I really enjoyed this All In podcast. I listen to it pretty frequently, and it gives me a good glimpse of. It ties in a lot of the financial world, the startup world, overall affairs. I'm not much of a daily news guy, so this helps me kind of stay in touch in the pulse and connect the dots between what's happening in the financial world and real estate.
Perfect. All In podcast. Great. Question number 3. What are you most curious about right now?
I'm curious about a lot of things, that's happening in our current financial system. But, I'm curious about seeing this war come to an end in Ukraine.
Absolutely. No, likewise. So many moving parts right now. Again, even with what happened with crypto this last week and where interest rates are going, where inflation's going. There's a lot of, it seems like it's just, the moving parts have been there for the last year and a half, but it seems like it's all kind of coming right now to I call it the eye of the hurricane. Like the first hurricane was like 2020 and the COVID, all the initial stuff. And then there was some calm in between. And now we're getting on the other side of that hurricane that's been it's been roaring, but we haven't actually felt the effects of it. So any thoughts on inflation and where we're at with any of that? I mean, I know we can't make predictions on this kind of thing, but what's your gut telling you?
Well, I think it's a good thing. I mean, I just think it's been just going out of control with a lot of supply and money supply and availability and to compound the problem, we've had the supply chain issues. So it's on both ends of the stick. This is just kind of going out of control to an extent where it affects our daily lives, right? So I think this is a good thing, and I hope genuinely hope that it does the impact that it was intended to do, but I don't see it having too much impact so far.
All right, 2 more quick questions. All right, second to last one is this: is there like a leadership quote or theme that you strive to live by that helps you to stay focused?
I think if you ask anybody to do something, ensure that you can do it yourself.
I like that. So basically, don't push a rope, but get out in front and pull the rope. Yeah.
Yeah.
Cool. Last question, and then we'll be out of here, Dharma. After all your success and everything you've done to help people create and preserve more wealth, and all the deals that you're doing, what's the habits that you try to practice to stay centered in your values and stay encouraged to charge forward to reach new goals?
Well, I mean, I think not focusing on not focusing too much on the financial aspects, but looking at the bigger picture of how you make a difference is more important. So I never find myself in a position of feeling like, I've done anything massive, till you really make a difference in a tangible way, non-financially, right? So
That's fantastic, right? So it's not just the external money part of it; it's the making a difference internally for people, for
yeah,
communities, for all the different things. Love it, Dharma. Hey, it's been more than a pleasure having you on the show, and I want to thank you for sharing a part of your story, opening it up on the Deferred Sales Trust experience with our team, and for our listeners who want to get in touch with you, you want to remind them one last time what's the best place for them to find you?
yeah. Check out our website, epitome.dev. Drop me a note, email is dharma@epitome.dev, and yeah, let me know how I can help.
Awesome. Thank you, Dharma. And I also want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast, also streamed on Expert CRE Secrets as well. And we just want to remind you that the number one enemy to exiting highly appreciated assets is not having a clear plan to defer that capital gains tax, or even might have some estate tax challenges too. And the Deferred Sales Trust is an amazing way to defer and or move funds outside your taxable estate as well, which is a great thing if you want to create and preserve more wealth. If you want to learn more about this and get started on your Deferred Sales Trust, you can go to capitalgainstaxsolutions.com. You can also join our free mastermind and take a look at our new book that's going to be coming out soon. It's called Building a Tax-Deferred Exit Strategy, and it's the proven playbook for unlocking your ideal wealth plan when selling assets of any kind for yourself and for your clients. We have people like Kevin Harrington from Shark Tank in the book, and other really smart people as well, which is pretty cool. So we appreciate everyone out there. Please rate, review, subscribe. Please share this with somebody it could help today or inspire. We appreciate